What is going on, YouTube guys? It's Brendan from Market Makers. Welcome to the show. So I hate people that say, I told you so, but I told you guys to watch Snap. And what happened with Snap? Snap is down 35, 40%. They missed on earnings. They missed everything. Guidance was horrible and they dumped. They're down about 40%. Tech is pulling down. Snap is the canary in the coal mine. Next week, we have Microsoft, we have Google, we have Apple, we have Amazon. And could Snap be a read-through for the rest of the market? Yes, it can be for the digital ad space and the social media space. Watch Meta. Watch what happens with Meta. They may be more affected than, say, Microsoft or Amazon. But guys, let me show you the reason I want to make this video. A couple of reasons. You guys know I basically have no life while I'm trading, and I watch CNBC, Fox Business, I flip back and forth, and to be fair, there's some guys that have absolutely nailed the calls so far this year, okay? There's some people, whether they understand market cycles or not, they've been right on the declination of price. I'm going to show you with a pattern exactly how the macro market, the broader market, the S&P is going to end, and I want, in my opinion, and I want to show you what that's going to do with Bitcoin here on my screen, because as I told you guys, I expect this Bitcoin move to fail. Look at the Kumo cloud here, right? Bitcoin on the daily. Bitcoin goes up, coming back down. You are on top of Wyckoff. You're going to try to base and make your cup. I do expect that cup to fail and to come back down. And the areas that we're going to look at, guys, for Bitcoin support are 15K. This is on the daily time frame using the same GAN fans from the weekly time frame, and 12K, your two immediate areas for support, because next week is also the Fed. They're raising interest rates. September, they're going to have the quantitative tightening kick in. We're going to see some action, guys, but I do believe we do have a big, massive rally that will be incoming, but I need to show you on the S&P, okay? So let me go ahead and minimize this. One moment. Pull this down. Now let's look at what's going on here for the S&P. So S&P on the weekly. These are my GAN fans, again, from the pandemic low up to the all-time high. The reason I'm showing you the S&P and not the Russell, not the NASDAQ, this is the broader market, okay? So this is what I want to show you. And guys, do keep in mind, if you want to learn how to lay out your GAN fans, these are the 45 angles from the GAN fans, the 1-1 angle. I did make a video. It is free. It is on YouTube. You can go on our channel, type in GAN fans, and you'll see a tutorial how to properly lay these things out. So this way, when you move your screen around, the 45 angle is true. Okay, so this is what I want to show you guys. You guys have seen my market pattern, my price pulse pattern on Bitcoin. Remember, the market moves in threes, not my theory, a theory I happen to agree with. GAN was a big proponent of the market moving in threes. So let me show you what I think is going to happen here. The big rally, as I've been saying on this channel, because the people on the business news are all confused, right? They're arguing, no, consumer sentiment is so bad that we have to rally. Now we can rally from here, and you can see where price is. You see the declination. We can rally from here. The fundamentals are sound. Inflation's peaked. You know, first of all, not to go off on a rant, I'll keep it really quick. Peak inflation doesn't matter. What matters is high inflation, because prices will not come down with high inflation. Keep in mind, that's inflation going up month over month, okay? So it doesn't matter if the inflation number is 9.1 or 8.1, it is high inflation. And of course, we do have a 41-year high. Now, guys, the first few months on the CPI, they're going to keep dropping off as we get new CPIs, and those were low inflation numbers. And here's the difficulty in predicting where inflation will go. Rents are still going. Home prices just hit another all-time high, okay? So even though the housing market in general has slowed down, you have those metrics which are basically a third of the CPI, and those are going up, but now we have commodities like oil coming down. How does that balance out? Well, in my mind, it's a 50-50 chance inflation, the next print, is even higher than this print. As a matter of fact, if you take off the first 6 months of the CPI and just do the last 6 months, inflation right now, according to the CPI numbers, which as we know are a joke, but inflation right now would be 11.1% if you get rid of the first 6 months. So is there a chance we do have peak inflation? Yeah, there's a chance, but inflation moves in waves, and it's just as equally a chance that that inflation number will be higher because home prices are so heavily weighted in the CPI. And again, the rent and the home price just hit an all-time high again. So let's look at this. I want to show you guys this pattern. Now, there's no three-wave pattern I can show you, so I'm going to use an ABC correction here for TradingView, okay? Pandemic low. to your all-time high. Now, I told you guys where this rally is going to come from, right? The real rally, the bear market rally, the big bull trap, it's going to come from the weekly 200, 233 on all the indexes, okay? So this is where we're going to. Now, I don't know where it will bounce up to because we don't have a candles here yet to take a fib wave projection, but let's just say the top of the triangle, okay? We'll do something like this. So the triangle, because if you notice, the pandemic low and the all-time high with 45 angles give you a triangle, right? So this will be your first move here. Now, keep in mind this declination from where price is right now. This is another 10% down because the S&P's been rallying all month, the Nasdaq's been rallying, the Russell's been rallying. So you got a 10% move down incoming, and then you got a big rally, okay? So this will be the second set of waves because after you peak out up here, again, you guys know this from the Bitcoin chart as well, after you peak out, you're going to come back down. So you'll have your A wave down. Now, we'll just say this bounces off the bottom. I don't know if it'll go all the way down here, might come right back down to here. This is just for demonstration purposes, but I want to show you how the market's going to end. Then you'll have a retracement wave up, and then you'll have your last final wave down, which I told you all the markets will return to their pandemic lows somewhere in this range, roughly 2,500 for me on the S&P. I think it's actually 2,350 if I lay out my fib waves, okay? So this is the market movements that I'm looking at. Let me go ahead and color this so you can see the difference here. So this will be your ABC wave up, your 1, 2, 3 up. The market moves in threes, just like ABC corrections, head and shoulders patterns, 3 candlestick reversals, lots of different patterns that have 3 price movements in the market, okay? I don't like that color. Let's use red. There we go. So this is what I'm looking at. This is what I think is going to happen. We're going to bounce off the 200, 233. This is where you're going to get the big Bitcoin rally as well. Now, nobody's going to show you this on TV, okay? It's not because I'm a genius. It's because they're all fundamentals. That's all they look at is fundamentals. Well, this company, S&P is trading at 16 times earnings, 17 times earnings, and this company's down at 12 times earnings. So this has a lot more room to go. And this area right here will be the ultimate bull trap, and you'll see the suckers on YouTube too. With the crypto, everybody's going to freak out when we go on this rally, but you guys know from watching this channel, and again, this is my thesis, guys, it doesn't have to happen. But when you look at the macro markets, you look at quantitative tightening around the world, you look at potential global recession. Most of you haven't been alive long enough probably to remember some of this. Some of you viewers have been talking to me about the 70s when I was born, but you remember the 70s with stagflation. I personally do not believe the Fed will be able to get inflation under control and down to that 2% target, which by the way is a BS target. That target has only existed for 10 years. In case you didn't know, they made that number up. You've heard the Fed say over and over again, 2% inflation, that's our target. Ben Bernanke invented that in 2012. Do you know why he did that? So they could continue to do quantitative easing, which is printing money, which has built up all this inflation. 41% of the money in the money supply has been printed in the last 2 years, guys. That's why you have this parabolic rise in all the asset classes, including crypto. And I told you before, 2 market facts. Whenever we've had in the history of our country above 5% inflation, there's never been a single instance that that inflation has come down unless the Fed was able to raise rates above inflation. That's never happened. Could this time be different? Sure, it could be different. Maybe they get it up to 3.5% and inflation comes down below 3.5%, but it's never happened before in history. More money has been lost in the marketplace from people saying this time is different than anything else. And never have we had inflation above 5% and not had a recession. And as you guys know, I do believe we'll find out next Friday or next Thursday, we already are trading in a recession. Okay. So that now the argument will shift. Watch, wait till next week. Oh, sure. It's a statistical recession, but it's not a severe recession. We don't see it. The consumer is strong. Do you know why the consumer appears strong? First of all, the vast majority of the trillion something dollars they say we have in savings, that's in the top 10%. Just like the top 10% own 80 plus percent of the equities. So that number is skewed. They don't divide it down into categories. And I know that's for a fact because I have family, I have friends, and I also know the statistics that 66% of Americans live live paycheck to paycheck. So if we have all this money in savings, then why does 66% of us live paycheck to paycheck? 30% of us making over $200,000 live paycheck to paycheck, because obviously if you're living in New York City, Chicago, San Francisco, everything's more expensive. But guys, just look at this market pattern, because this is the trajectory, again, weekly time frame for how I believe all these markets are going to behave. They will all adhere in the end to this price pulse pattern. You guys can come back to this video. So maybe 6 months from now, a year from now, however long this takes to play out, the dot-com crash took 2 years. You can come back and be like, oh my God, these movements are exactly as he predicted, because this market pattern happens over and over again. And by the way, I've showed it many times, happened to Bitcoin in the last bull run as well. 3 waves up, ABC correction, pandemic lows, here we come in all the markets, and this will take time to play out. Now, what could change? What would make me change my mind? If the Fed decides to pivot, we have a whole different ball game on our hands. And for those of you that don't know what that means, a Fed pivot, let's just say the market's already pricing in a pivot for early next year. And you already hear people on TV saying, I think by the fall, September, October, November, the Fed will stop raising rates. They'll say, let's see what happens in the market if inflation continues to come down. All these are real possibilities, because the Fed has no backbone. They have no spine. That's why they waited so long to start raising rates in the first place. Now, if they pivot and they keep the interest rates, or they start cutting interest rates, you will have rallies from that, guys. I'm not going to deny that at all. And if they start printing money, you're re-inflating the bubble. This market pattern in the trajectory that we're talking about is based on what the Fed says they are going to do. I cannot read their minds, but this is what they say they're going to do: raise rates until inflation comes down. And this is what I think you're going to see in the marketplace, okay? So this is what we're looking at here with this pattern. And if they do pivot and start printing money or cutting rates, they will cause potentially hyperinflation, because right now we are trading in stagflation. So we shall see, but I do believe this pattern is going to adhere very, very closely to this. And as we get candles, guys, we'll get fib waves and we'll have actual targets for this. But this is a big macro pattern. Now, man, that was a quick rant of 12 minutes. Let's go ahead and go through this really quickly so you guys can see a couple of things. The S&P, I told you that 4,000 is my target. We got the 4,012. We are falling back down. And however, if you do put this in Wyckoff, what you're doing, just like you're doing in the daily in Wyckoff on Bitcoin, we're going to jump over to Bitcoin here in a second, guys. I know a lot of you want to see that. What you're doing here on the daily is you're trying to base. You see this? But I think you're going to get rejected here. Look at the cloud. But look where it thins out. And you're going to see this in Bitcoin too. It thins out for this over here in September. So you're looking over here in September on the daily time frame. But we'll look at Bitcoin. Let me go ahead and jump to the NASDAQ. Again, just the price decline, guys. I want to show you this because we've been rallying. And then we'll look over at Bitcoin. And let's go ahead and get this price from where we are now. Let's try to get this exact or precise as we can. About 11% move down to the 200, 233. You can see your triangle, the 1-1 angles. You're going to do the same thing. You're going to knock down here on the NASDAQ and then peak back up. Can we get to the top of the triangle? I don't know. We got to see candles, take a fib wave projection. We'll see what targets we have lower. But I do believe that's the market pattern all of these are going to adhere to. On the daily, guys, same thing. NASDAQ on the daily is stuck in the Kumo cloud. You're trying to base. I do believe, based on these earnings coming up next week, if Snap truly was the canary in the coal mine, Snapchat, you're going to see the tech sector decline once again. Fed raising rates, GDP report most likely going to show we are in a recession, and I think you're going to fall back down. And if you look at this, end of August and the Kumo cloud, it starts getting very thin and super thin here in September. So we will have that big rally, but we got to get that declination back down to the weekly 200, 233. And let me show you this really quickly, because that number for the weekly on the S&P, about 3,500 I told you, and if it loses that, it's coming down to 3,000, the base of the triangle. Just to give you an idea where this is, guys, about 3,500. Let me show you this. It's not that far away when you start looking on the chart. Get right about there, 3508. You see that? So 3508. So this is what we're talking about, is this price decline to here, bouncing back up. Okay, so we're going to lose this, whatever happens here. We hit some resistance, we fall back down, hit resistance, fall back down, however long this takes. Okay, this could be the month of August. This could happen in a week, it could take a month, but you come back down here and you're going to make progress, come back up, and I believe you're going to punch through the weaker part of the cloud to continue this bear market rally where everybody will get super excited and it'll turn into a big bull trap. Now, that was the S&P. Let's look at the Russell on the daily really quickly. As you can see, hit the top of the pitchfork, got a wick out of it, fell back down. And on the Russell, on the 8-hour, got hung up in the 200, 233, and look what happened. This looks to me, a lot of the markets, the NASDAQ too in the smaller time frames, they're printing that first part of the double top. Now, what you want to see here is that cup, okay? You want to see it hold this and then come back up, and that could be your pivot out, just like when you did it here, okay? Or just like when you did it here. That's what your pivot needs to be, and that will determine, you'll see some of this next week because these are 8-hour candles here on this chart. Because if you just do something like this and come up and roll over at the resistance again, you're failing. And here's your top of Wyckoff, your base of Wyckoff. And then how many times have you guys seen this on this channel over and over again? This is when you get your dissension back down. And again, all of this with very low volume on the indexes, okay? So let's go ahead and let's pull back Bitcoin and go into Bitcoin. I know you Bitcoiners were just probably pulling your hair out during that explanation, but it's very important for crypto, guys. I wouldn't be showing it to you. I mean, the fact that I do trade that, a lot of you guys do trade these markets, so I know some of you do appreciate it. And let's go ahead and look at this in Bitcoin on the daily. So guys, same thing. Daily, like I just showed you, we're hovering on that 50. I expect us to try to come down and hold this. I do expect this, regardless of where we go up into here, I expect this to fail and you have a much thinner cloud. Look at the date at the bottom of my screen, going out into August, going out into September, just like the indexes, okay? So be much more bullish if Bitcoin can hold this Wyckoff range that it already has, but I do anticipate, obviously, with Bitcoin moving at approximately a 2.0 beta to the NASDAQ. If the NASDAQ has to decline 9 to 11% to get to its weekly, Bitcoin's going to decline 20% minimum, and we'll see what happens here. So 20% would take you what? 10% would be 2,000. So 2,600 points. So you could be coming back down, and you might be able to hold a range. Now, it's not an exact one-for-one dollar measurement, okay? But you could hold this Wyckoff range and just do this accumulation here. But you can also easily come down to that 15K level. Again, I think a lot of it depends how it happens. If the markets really do capitulate, like the VIX spikes up over 40, I don't think Bitcoin's going to be able to resist having a larger drop than the markets, okay? It just seems to be that's how it would trade. I can't imagine the markets actually capitulating and Bitcoin just does this and does this. I don't see that happening, but I watch 15K closely, watch 12K. But if it does this, that's fine too. What we're looking at here, guys, is the thinning of the cloud on the daily time frame. Very important. And let's go ahead and look at the 8-hour. Again, this would line up very well with what I told you guys. This is the RSVVB. Guys, yesterday in the video, I showed you how to get my Ichi cloud from Donovan Wall, right? DW, he also has this exact same indicator. This is one of his indicators, so you can read the white paper on it and everything there, but that's where you can get this from. Type in RSVVB, DW, and you'll see it. Or just go to Donovan Wall from that Ichi video, and you'll see it in his huge list of indicators that he programs. But this would also line up very well with my theory that I just told you with the markets. We could come back up or even not come up because we actually haven't tested them yet, but just roll down here in this double top fashion, come back into this trading range or potentially come lower into the trading range, okay? And then you have your volatility, massive expansion on the 8-hour. Let's look at the 4-hour, more interesting. 4-hour above the 233, using it as support, as you can see, but you already have your double top. As you guys know, we have this in Wyckoff. That's this white line, ceiling base. So you're above your trading range, and what you want to do here, but you're already failing on the 4-hour. Again, you want to make that cup, but your cup's already kind of rolling over because tech is selling off today, right? So if you don't hold this and you do come down, you have to watch because once again, guys, thin areas of clouds, right? These are all thinner areas. You can fall through any size cloud, punch through any size cloud, more likely to happen in a thin area. And then you want to hold this trading range. Looking at your money flow, you are super bearish on the 4-hour and you are not oversold. So this still has room to come down if you get that momentum to come down. So pay very close attention to that, guys. And looking at gold, because we talked about this yesterday. I wanted to show you this is doing exactly what we talked about yesterday, right? So we have this in Wyckoff. This is on the daily. I showed you this on the weekly. Let me go ahead and show you this right here, so jog your memory for those of you that are curious about gold. We have this in Wyckoff, the red lines here, right? The 1 fib is at 1672. I told you I like gold at 1425. I think gold will keep continuing to decline. Here's your 200, 233. Let's go back to the daily so I can show you this in a little bit tighter time frame. I told you that if it does spike down in the down thrust, you need to watch it doesn't roll over just like silver did, right? And then look exactly where you got to, this 618, the most commonly retraced 2 fib, got rejected. So you already have a candle here in the daily. So what you've done right now is something like this. You don't want to do this. If we start getting candle closes and open and a close below 1672, something like this, and the Fed's raising rates, strengthening the dollar, here's your 200 and 233 on the daily. They're well above you. I'm going to be looking at this dissension here. It might be something I would be interested in shorting. I would have to see it, guys. And here is the silver chart. This is the exact move I'm talking about here on the weekly. This move right here, guys. This is what gold's doing right now. It's got one candle up. It hit at 618. If you see it start rolling over and start closing, getting down below here, closing and opening below that 1 fib on the gold chart, look for that price dissension, okay? Because that dissension will take you to 1425 on gold. And here on silver, my expectation is 1618 at 1285, which of course, guys, brings you back to your pandemic low. And in that fashion, the metals would be leading the markets. And I do expect the metals to at some point explode, especially if the Fed does stop raising rates and is forced to go back to quantitative easing, stagflation environment, when the market realizes, oh my God, the Fed can't keep raising rates, the market's cratering. That is when you can see gold skyrocket, guys. Hope you enjoyed this video. Another video coming tomorrow. Guys, check out our sponsors. I did not plug them. Check out the sponsors in the video description. Check out our room to trade with us right below the video. You can click the join button for Discord and the Telegram in the video description. Talk to you guys tomorrow, everybody. Fantastic day.